The Moscow Exchange Group is the largest exchange group in Russia that provides electronic trade organization, clearing and settlements on trades, depository and information services. It was formed through a merger of the MISEX and RTS exchanges back in 2011. The company operates in such markets as equity, bonds, derivatives, foreign exchange, money and precious metals. The exchange went public in February 2013 with the IPO volume amounting to 15 billion rubles. MOEX's financial performance for the past 2 years has shown impactful growth rates in all the main financial indicators. Net income, EPS, ROE as well as dividend yield have shown a considerable increase for the past 2 years, and we certainly believe they will rise further. Fee and commission income also shows a positive dynamic, growing by approximately 18% per annum since 2013, and according to our estimation, it will go on rising. Moscow Exchange holds majority stakes in all key subsidiaries, including 100% stakes in MISEX Stock Exchange and the NCC Clearing Bank, a 99% stake in the NSD, and a 60.8% stake in the National Mercantile Exchange. Moscow Exchange provides shareholders with an equal and fair opportunity to participate in its profit distribution by receiving dividends. Payment type is cash dividend. Since Moscow Exchange's IPO in 2013, it has regularly been paying dividends once a year. Consequently, we strongly believe that dividend per share will maintain a moderate growth dynamic. MOEX has a dispersed ownership with one of the highest free float in Russia of 62%. Central Bank of Russia owns 11.77% of the shares, Sberbank has 10%, National Bank 8.4%, European Bank for Reconstruction and Development 6.9%, MISEX Finance 1.9%, and 61.9% free float. Management team consists of highly qualified specialists with CEO and Chairman of the Executive Board, Alexander Afanasyev. MOEX business strategy 2015-2020 is based firstly on diversification, secondly on optimization, thirdly penetration and deepening the market, fourthly sophistication, as well as standardization of the Russian financial infrastructure.
According to the statistical report issued by the World Federation of Exchanges, the total capitalization of the global stock market has risen by 4.4%, reaching 70 trillion mark. As far as the global debt market is concerned, the value of the fixed income instruments issued in 2016 has grown by 2.9% as compared to 2015. Due to the peculiarities of the industry Moscow Exchange operates in, it's difficult to identify its competitors. We, however, want to highlight the following platforms. London Stock Exchange and New York Stock Exchange trade depository receipts underlain by Russian corporate shares. Hong Kong Exchange is one of the Asia's largest exchanges, and the competition with the Moscow Exchange commenced in 2010 when the shares of Rusal were first listed. Hong Kong Exchange especially stands out in light of the sanctions imposed by the West. Chicago Mercantile Exchange is one of the world's largest derivative exchanges. CME is the primary competitor in the American dollar-ruble pair-based futures and options. We believe that political and macroeconomic risks pose the biggest threat to Moscow Exchange, since continuous decline in real disposable income of Russian households may contribute to the overall downturn in the stock market. Further lowering of the key interest rate by the Central Bank of Russia will have an adverse effect on the interest income of Moskovskaya Birja. Stabilized oil prices and ruble exchange rate represent another danger for the volatility-dependent earnings of the Moscow Exchange. Among other risks, we consider further as important. These are reputational, operational risks, legislative and informational security risks. As for the multiples valuation, we have divided the public comparable companies into two groups based on the type of the economy they operate in, developed and developing economies respectively. We used EV to EBITDA, price to EPS, and price to book value per share multiple. As you can see in the slide, EV to EBITDA multiple indicates a great discount, whereas all others show that Moscow Exchange shares trade with a slight premium. However, the average implied price derived from the multiples valuation is 152.1 rubles, which confirms the results of the DCF valuation.
The foreign exchange market raising members are Russian banks and brokers. Besides, by way of the direct market access and sponsored market access technologies, access to foreign exchange trading have trading members' clients. The total foreign exchange market trading volume grew up to 6% year-on-year in relation to the interbank market as a whole. In particular, USD ruble pair trades went up to 8%. The spot and swap market trading volume grew by 4 and 7% correspondingly, due to increased demand for liquidity management instruments. The Chinese yuan ruble currency pair also developed successfully. Trading volume grew threefold in 2016. We presume its revenue will keep on growing at a rate of 7%. Money market consists of two segments, lending operations and repo on the stock exchange, which takes the biggest part of the overall trading volumes. Hence, commission income of repo totals to 89%. The volume of repo with central counterparty trades grew threefold year on year. The volume of interbank repo increased twofold year on year. Money market fee income grew by 28%. Money market fee income grew by 28% versus 2015 due to an increased number of repo contracts on the basis of MIAC ratio. We presume substantial growth in the next 5 years of 20%. The fee income on the equity market grew historically at CAGR 11%. We have a positive view and project growth at 4% because of a positive trend of capitalization in GDP. The fixed income market fee income grew by 14.3%, driven primarily by large initial offering volumes. OFZ offering volumes grew by 70% versus 2015, while other bonds offering volume reached the record level of 3.9 trillion ruble. Income from listing and other services grew by 23%. So, because of the planned bandization policy and positive trend of the debt market, we expect fixed income market revenue to grow 1.2% in 5 years. Derivatives market fee income grew by 42% versus 2015, and we presume growth of 4.3% CAGR. Commodities market has risen by 18% thanks to an increased trading volumes of precious metals and shows a high potential.
MOEX revenue grew 37% on average per annum from 2013 to 2016, and we expect the growth of 14% in the next years because of the following facts. The market regarded MOEX as a worthwhile investment, having demonstrated an upward trend. MOEX is a unique player on the Russian financial market with a mix of drivers in the form of money market, FX market, and the developing commodity market. Furthermore, since the company structure is virtually integrated, MOEX has diversified operational activity and is not subject to market instability. MOEX demonstrated growth of 47% year to year. We expect this growth trend to continue. Top three classes of investors show a positive trend. Let us begin by analyzing the company's income statement. Operating income is divided into two main components: fee and commission income and interest and other finance income. The former has a stable growth over the forecasting period, and the latter is thought to fall steadily according to our estimations. The company has managed to keep total operational expenses lower than inflation rate, but since the business is growing and they forecast the CPI in Russia to decline, the expenses will grow at the rate of inflation. What is more, we see a stable growth in EPS and DPS as a result of increasing net income, and the company plans to keep dividend payouts at the level of 55%. We use a 5-year DCF analysis to value the company, since financial sector is a rapidly changing one and valuation for longer period is not represent the real picture. To calculate better, we have chosen comparable companies on emerging and developing markets and found unlevered beta for each of the peers, taking into account the company's betas, marginal tax rates, company's betas, and debt-to-equity ratios calculated in accordance with their financial reports of 2015. As a result, we have found median unlevered beta. Then we find unlevered beta for MOEX. For this purpose, we take the median unlevered beta of the comparables and assume that MOEX doesn't plan to attract debt capital. As a result, beta of MOEX equals 0.74. We have calculated cost of equity through 3 different methods and have taken the maximum of them, 18%, which was found via interest rate parity theorem. The maximum is taken in order to avoid the risk of overvaluing the company. Finally, we find weighted average cost of capital. Since MOEX doesn't have debt in its capital structure, WACC equals cost of equity and makes up 18%. When calculating depreciation and amortization, we took into account previous capital expenditure and D&A and presume that CapEx until 2020 will make up 3 million rubles yearly. The most important factor to influence our DCF model is non-cash working capital with balances of market participants. The latter tends to fall and remain negative. As a result, we come to the price of 140.53 rubles and give a buy recommendation.